Good morning, and welcome to World in 5, your trusted source for comprehensive coverage of today's most pressing events.
The US SEC has given the green light to the first spot Ethereum ETFs in the United States, with trading set to commence tomorrow, July 23. On July 22, the U.S. Securities and Exchange Commission accepted the securities filings for several spot Ethereum ETFs, allowing them to begin trading as planned on Tuesday. We have Shelby reporting on this.
Among the approved ETFs are products from 8 issuers, including prominent asset management firms Fidelity, BlackRock, and VanEck, as well as 21 shares and Bitwise. The initial approval for these ETFs came at the end of May, but the issuers were awaiting the final approval of their S-1 filings, the registration for new securities, to commence trading. Last week, the SEC informed these firms that their S-1 documents needed to be finalized by July 17 to receive approval for the July 23 trading start. Kaiko Research released a report today indicating that the future price of ETH post-ETF launch remains uncertain. The report highlighted that the demand for futures-based ETFs, which launched last year, was relatively low. Over the past 24 hours, ETH price has decreased by approximately 2.5%, currently trading around $3,400. Analysts from IntoTheBlock noted earlier today that Ethereum is facing significant resistance around the $3,500 level. Back to you, John.
Thanks for that update.
Gate.io has announced the termination of all its services in Japan, starting with a halt on opening new accounts for Japanese residents. We have Anthony reporting on this.
In a Monday announcement, Gate.io detailed a compliance process for its customers to migrate their assets to crypto platforms that adhere to Japanese regulations. As a leading cryptocurrency exchange globally, we aim to comply with financial regulations in all regions we operate in. Consequently, we regret to inform you that we will be ending our services in Japan. The exchange stated, Gate.io has stopped accepting new account registrations from users in Japan and is implementing measures to facilitate a smooth transition for existing customers. This includes launching a program to ensure compliance with Japanese market laws and regulations to assist users in migrating their crypto assets. Back to you, Bella.
Thanks for that update.
CoinShares reported that crypto investors have funneled $3.2 billion into digital asset investment products over the past 3 weeks, reflecting a bullish sentiment in the market. We have Jensen reporting on this.
Continuing this positive trend, investors deployed $1.35 billion into crypto products last week alone. A significant portion of this capital went into ETFs, with crypto-backed funds experiencing a 45% week-on-week increase in volume. Bitcoin, BTC products, especially in the US, led the charge, attracting $1.24 billion between July 15 and July 19. Spot Bitcoin ETFs on Wall Street saw net inflows for 11 consecutive days prior to last week's spike. Products from issuers such as BlackRock and Grayscale manage over $60 billion in assets and have seen $17 billion in cumulative net inflows since January, according to data from Sosa Value. Ethereum ETH has surpassed Solana SOL in terms of year-to-date YTD inflows. Following a $45 million influx last week, ETH products have garnered $103 million by TD, compared to SOL's $71 million. Back to you, John.
Thanks for that update.
Joe Biden will remain president for the rest of his term, but attention has shifted to who will replace him in November's election against Trump. We have Alana reporting on this.
Biden's sudden exit from the presidential race initially triggered panic in the crypto markets. Bitcoin's value plummeted by nearly $1,500 within 30 minutes as investors grappled with the uncertainty surrounding the new Democratic nominee. However, the market downturn was brief as traders began to view this development as potentially bullish for crypto policy. Industry leaders have been frustrated with the Biden administration's stance on digital assets, arguing it has stifled innovation and harmed consumers. In March 2022, there was initial optimism when Biden signed an executive order on cryptocurrencies, directing government agencies to assess their risks and benefits. At the time, Coinbase noted that this move signaled the White House was taking the potential of this technology seriously. Back to you, Bella.
Thanks for that update.
Thanks for tuning in to World in 5 for your daily dose of news and updates. Don't forget to hit that subscribe button and turn on notifications so you never miss out on breaking stories and insightful analysis.